This is Jim Martens, Senior Currency Strategist here at Elliott Wave International, and today is Friday, February 22nd. If you're a regular reader of mine, you know I like to hammer home the point of how important it is to have market perspective. Sure, I use the wave principle, and if you throw a chart down in front of me, I'll probably have an idea of where the market's going. But if you threw this chart down in front of me, which happens to be dollar-yen on an hourly basis, I would probably conclude that, well, it's a pretty impulsive looking rise off the low back here on the probably on the 11th, followed by what looks like a corrective pullback. So I would say dollar-yen is headed higher. Simple enough, right? But what if I said that high right here, right above 108.50, is this high over here on the right of this chart? This happens to be a 2-hour chart. And I've left off the price movement since that high because I wanted to show you from the previous low what it looked like going up. Now, if you threw that chart in front of me, I'd say, simple. Look how corrective that is. Dollar-yen is headed lower. Well, how can this be? I think I'm right on both cases if I looked at that price structure in isolation. And that's my point. You should never look at anything in isolation. Perspective. Where did this market come from before it got into this low? Well, let's take a look at the daily chart. And we see that dollar-yen fell from above 114 all the way down to just below 105. And the bounce from the previous chart retraced just about 38.2%. Well, if I looked at this chart, if you showed me this chart first, I'd say, I have no doubt at all. Dollar-yen's headed lower. It's sharp to the downside, corrective to the upside. Simple. So now I've looked at 3 charts. The first one, you'll recall, I thought dollar-yen was going up. The second one, I thought dollar-yen was going down. And now I'm telling you dollar-yen is going down. So I could split the difference and say, well, 2 of them are bearish and only 1 is bullish. So I'm going to weigh in on the bearish side. And hey, when I'm working with multiple wave counts, I often do just that. If they're all pretty equally weighted in likelihood, I'll often say, well, if I have 5 counts and 4 of them are bullish and 1 is bearish, I'm going to lean towards the bullish case, but I want to know where they're wrong. But in this case, we're talking about having market perspective. So let's say the proper way, for me, I believe the proper way to do this analysis is I start with this chart. I always look at my larger charts every day. And I know that market's been having an easier time falling and struggling to rise, meaning the larger trend is to the downside. So now I kind of go into this knowing what to expect, that this bounce should prove corrective. And this is how we counted it in real time. You notice this chart is dated over a week ago. We counted a zigzag up, an X wave, and then a second A, B, C for what's called a combination correction. Now, I've covered that in a previous chart where I talked about complex corrections, so I won't go into detail here, but it is corrective. We know from earlier that this high, labeled C, was in the area of a 38.2% retracement of the prior decline. We also know from this chart that the 2 upward moves, this ABC and then the second ABC, are right about equal. Memory serves me right. I think it's within 5 pips. So we'll just call them equal. So at that time, over a week ago, we had a very strong idea that this correction or this bounce would prove corrective. Well, if that's the case, then how am I going to go about counting off that high. So here we are again. And this is the chart where we thought maybe this whole thing was going to be corrective to the downside when we first started this whole endeavor. But now, knowing that the larger trend is the downside, you could see I went with a 1, an expanded flat 2 because we reached new lows within the correction, and C ended just above A, and the market was going sideways. While this was, you can see the question mark, while the count was in doubt, the perspective told me that I had to lean towards the bearish side. And that's why I'm labeling with numbers to the downside, letters to the upside. And from this spot here, what happened is, and this will bring us right up to today, dollar yen did fall and did so impulsively. So I think we're on the right track. But we've come for a full circle here, and you can see that I started with a chart that if I knew nothing else, again, if you just threw this down in front of me and I didn't know what I was looking at and what time frame, I would say, well, you need to be a buyer of dollar yen. But in the end, we start looking at this chart and I say, no, I don't. We're headed back to this 105 area, if not below. So this shows the importance of market perspective. Online charts are so prevalent, so readily available. They're easy to manipulate. You might as well look at several different degrees of trend, looking for the common denominator. It's so much easier to be bearish in a bear market or bullish in a bull market. Find out what the general trend of the market is, and then drop down and start following the shorter term swings, however you want to do it, whether it be on a 60-minute chart or a 15-minute chart or whatever. But I think before you drop down, you need to look at that bigger chart, probably a daily chart, maybe a weekly even, to find out what the overall trend of the market is. So with that, I'm going to leave it for today. Please continue to send in your questions, and I'll use these videos to answer them. And with that, I'll speak to you again next week.